Welcome to another S&P 500 analysis. Did the market finally got the message from Jay Powell this week? Is the market repricing it for a recession now? And are those mega cap tech stocks finally starting to come back to earth? I certainly do not have the answer for all these questions, but that shouldn't stop us from looking at the price action of the S&P 500 and the other major market indexes, the sentiment, market internals, 10-year yield, US dollar, oil, silver, and gold, and see what they are telling us. Stay tuned. Now, looking at the weekly performance for the indexes, we see that the Dow Jones Transportation was the top performer last week with a loss of only 105 points or 0.71%. The Russell 2000 was the worst performer for the week. It lost 2.9% or approximately 54 points. And month to date, all the indexes are still holding a gain for the month of June. And the Dow Jones Transportation topped the list with NASDAQ 100 holding second place. Dow Jones Industrial is the worst performer month to date, and the S&P 500 is at the bottom 3 on the list. Year to date, all the indexes still holding a gain, with NASDAQ 100 still holding a 36% gain year to date, with the S&P 500 holding a 13% gain, and the Russell 2000 2.5%, and the Dow Jones Industrial is at the last place holding 1.75%. And looking at this weekly chart of the S&P 500, we notice that the range for the week contracted to only 59 points, and it lost 81 points or 1.4%. Ended the week with a bearish inside bar, closed above the 10-week and the 40-week moving average, and ended this 5 consecutive up week. It is still in a one-time framing up. And looking at the 11th sector in the S&P 500, we notice all the sector ended the week with a loss. Healthcare sector is the top performer with only a 0.16% loss, while the real estate was the worst performer with a loss of nearly 4.9%. Tech was at the bottom third of the list here with a loss of 2.62%. And looking at the sentiment chart, the VIX is still near the multi-year low, and it closed the week at 13.44. The put-call ratio came back up just slightly above the 0.75 level and ended the week at 0.8. Market participants are still cautiously bullish. In the New York Stock Exchange up-down volume ratio, so seller was very much in control for the entire week, and the daily advance decline also shows seller dominate every day except Tuesday. The new high, new low, the new high came back down below 100, but still outnumbered the new low marginally by 5 more new high on Friday. The cumulative AD line is still showing a negative divergence, and we're still waiting for a resolution on this. And for the NASDAQ up-down volume ratio, it also shows seller dominate the entire week, and the daily advance decline showed broad market participation on the selling throughout the week. And the new high, new low reverted back to more new low than new high. And the NASDAQ cumulative AD line is still showing a huge negative divergence. And looking at this yield curve, the 10 versus 2, we see that it's showing an imminent recession. It inverted with 101 basis point. It's sitting at minus 1.01%. And here we see the 10-year still chopping around near this 3.75%. The expectation is for it to work itself back up toward this 4% level. And the US dollar found some support down here at 102, so we'll see what it'll be able to hold about this level. If not, then we'll be looking for the US dollar to come back down to this 101 area. Oil is bouncing near the 70 level and is still holding this trend line support. So we'll see what it'll be able to push back up toward this 83 area. Silver broke down from this bear flag and dipped below the 23 level. We'll watch the major move between 21.75 and 21 level. Gold broken down from this trend line and went below this 1937 support level. So we'll be watching for a move to possibly come down to this composite point of control near 1890. And look at the daily chart of the S&P 500. We see the S&P 500 closed just right below the lower range of the expected move for the prior week. And it is holding this 43.25 support level. And the next week upper range is between 44.10 and 43.97.50. And the lower range is between 42.99.10 and 42.85. So watch the chop around this 43.25 area, then look for a resumption toward this 41.95 support level for the intermediate term. If it could bounce back up from this 43.25 then look for intermediate move to this 45.12 or 45.13 area up here. And the Nasdaq 100 also tagged the lower range of the prior week and ended the week slightly above it. It held this 14,787 support. Next week's upper range is between 15,250 and 15,166.40, and the lower range is between 14,616.60 and 14,530. If you could stay above this 14,787, then look for a move to the upper range. If it is unable to stay above this level here, then look for an intermediate move down toward this 13,880. The Russell 2000 came back down and tested the previous breakout pivot high near this 1810. So continue to watch to see if it will be able to hold this support here. And the expectation is that it will not hold the support and will break below this 1810 level, and it will continue to move down to fill these gaps here at 1782 and 1731. The Dow Jones Transportation is holding at this 14,637 level. So we'll see if we'll be able to get a bounce and move back up to this 15,321. If it dips below this support level, then look for a retracement down to this 13,461. And the Dow Jones Industrial broke out of this 34,277 and trapped some of the buyers up here before it resumed back below it. And now the potential resistance is this breakout level at 34,277. And the potential support area is down here at this 32,567. The New York Stock Exchange Composite also came down and tested support level of 15,441. If you could get a bounce from this support level, then look for a potential move back up to this 15,710. If you're unable to hold this level, then watch for a gap fill and move down toward this 14,880. Now let's take a look at the ETF for the indexes, starting with the diamond, the ETF for the Dow Jones Industrial. And looking at this chart here, these levels represent the volume ledgers from this composite volume profile here. So that's why I extract all these different levels. And we zoom in and take a look at the price action from the prior week. We notice that the price came down to this lower range of the expected move and closed below it. So right now, it appears that it is heading down toward this gap here. And for the coming week, the expected move upper range is between 342 and 341.10, and the lower range is 333.30 and 331.80. So the expectation is if it could not get back above this composite point of control, then I'm looking for this thing to come down and try to fill this gap here and also tag this lower range of the expected move and see would it be able to find support off of this trend line bounces back. If it dipped below this lower range, then I expect to look for a move, work itself down toward this pivot low here near 325.82. Now, if it does get a bounce off of this composite point of control, then look for the possibility of the upper range of the expected move to get tagged. And here for the SPY, the ETF for the SP 500, notice these levels here off of this volume profile, the ledgers, and also the composite point of control at 411.72. And looking at the price action of the SPY, we noticed that previous week that it came down and closed below the lower range. And right now it seems to be pulling back, and it could be working its way back down to this level here in the near term of this 429.50. And here are the ranges for the coming week. The upper range is 439.50 and 438.30, and the lower range is between 428.10 and 426.70. So what we'd be looking for in the coming week is if it continue to pull back down, then we'd be looking at the possibility of come down into this area here. We have a little bit of a balance area between 429.62 and 426.14. So this is also in confluence with the lower range of the expected move. Now, if we could get a bounce back up, then we'd be watching for the possibility of come up and tag this upper range of the expected move. But eventually, I'm looking for this thing to come down to possibly get down to this point of control here at 411.72. And here are some of the levels to keep an eye on for the QQQ, the ETF for the Nasdaq 100. And again, these levels are extracted from this composite volume profile. And looking at the price action from the prior week, we see that it came down and tagged the lower range of the expected move and closed just above it. So right now, we are looking for the price to continue to move back down. And here are the ranges for the coming week. The upper range is between 371.30 and 369.30, while the lower range is somewhere between 355.70 and 333.50. So the expectation is for the price to come down to this lower range of the expected move and take out this 357.48 level here. It got rejected from this 367.48, so we'll be watching to see what it come down to this area here. Now, if we get back above this 367.48, then we'll be looking at this upper range of the expected move, possibly get tagged. And if we take a look at the 60-minute chart for the QQQ, you notice that there is a possible head and shoulder pattern that is being developed here. So watch for this level to get broken and come down to this lower range of the expected move. And here are the level for the IWM, the Russell 2000 ETF. Again, these are the levels taken from this composite volume profile. And notice there are a couple gap here that is waiting to get filled. And looking at the price action from the prior week, we noticed that it came down and closed below the lower range of the expected move. So it appears that it might be coming down to test for support at this 178.88 level. And here are the ranges for the coming week. For the upper range is between 185 and 184.10, and the lower range is between 177 and 176. So the expectation is for the Russell 2000 ETF IWM to continue to come down and test this 178.88. And if it breaks this level, then we expect to look for this thing to come down, fill this gap, and that would also come into this lower range of the expected move. And eventually work itself down toward this gap and fill down here at this 171.50. So in summary, the market is showing signs of a pullback, but the market participants are still cautiously bullish. The negative divergence between the cumulative advance and decline is telling us to remain cautious. And be sure to go check out my Substack page for additional content, and don't forget to smash the thumbs up to give it a like and help promote this video on YouTube. If you're new to this channel and like to continue to watch these content from me, click to subscribe to this channel. Thank you for watching and stay safe.